when I say everything right, Jeremy, we work hard, we hustle, we show up, we're responsible, we pay things on time. And people don't feel stuck because they're failing. They feel stuck because there's something isn't working the way they expected. And that creates this silent pressure. And so what I want to know from you, Jeremy, is why do people who are doing all the right things still feel behind?
Yeah, I mean, if you're putting savings away and you're funding your retirement accounts, what you end up doing is you are technically paying yourself first, right? When you fund your retirement accounts, you're paying your future self first. You're not necessarily paying your present self first. So what ends up happening? When life happens here in the present, that's when you start to feel a little bit of squeeze, a little bit of tightness in your chest. It's like, I have the money on paper.
Welcome to another episode of a special episode of WealthWise Banking. I'm Jason Sipple here in the city beautiful Orlando, Florida, and I'm with my ever-present and amazing co-host, Jeremy Lee Huggins. Jeremy, how you doing today, brother?
I'm doing well, man. I'm doing well. I'm glad we're getting back together after your recent ski trip with the family. I missed you.
Yeah, we missed you too. I mean, we miss LB more, but we missed you too.
Fair enough. Yeah.
Yeah, we did some slushing. It was the least snow they've had in quite a while up in Salt Lake, but or in Park City, but it was still a lot of fun. Connor's pretty adventurous, so it's good times.
Good, man. Yeah, and I saw that he was doing his own little episode a day himself. So if you're not following Connor Sipple,
Yeah, we can have a whole episode on that. I mean, we talk about the importance of having a plan, being proactive, knowing what you want, and then doing the work to get it. And that's what you're seeing. You're seeing that in action. And it just happens to be that he's learning about the what we talk about every single episode from this little black book that we both owe a whole bunch of stuff to this man right there on the back. So nice
that's it.
point of R. Nelson Nash for you, for those of you listening and becoming your own banker.
Yeah, yeah. So for today's episode, it's April 1st. So this is usually the day where everyone gets together for pranks and jokes. But Jason and I kind of wanted to talk a little bit about financial jokes and how some of them just really aren't that funny. And a couple of these jokes, as we get through it, financial jokes, you'll start seeing why saving money isn't necessarily able to solve all of your problems and what actually changes when you just make one change in your life, and it's where you put your money first.
And it is that simple, isn't it? I mean, is that maybe the joke? It's like the strangest secret that Earl Nightingale talks about that people just don't think. Is that what we're here for today, Jeremy?
It can't be that easy, right?
It can't be that easy, right? Like, I mean, the first thing we're going to talk about is like I'm doing everything right.
Mhm.
So what's wrong?
Mm.
You know,
Yes.
and for this, we work, when I say everything right, Jeremy, we work hard, we hustle, we show up, we're responsible, we pay things on time. And people don't feel stuck because they're failing. They feel stuck because they're there's something isn't working the way they expected. And that
Mhm.
creates this silent pressure. And so what I want to know from you, Jeremy, is why do people who are doing all the right things still feel behind?
Yeah, I mean, if you're putting savings away and you're funding your retirement accounts, what you end up doing is you are technically paying yourself first, right? When you fund your retirement accounts, you're paying your future self first. You're not necessarily paying your
Mm.
present self first. So what ends up happening? When life happens here in the present, that's when you start to feel a little bit of squeeze, a little bit of tightness in your chest. It's like I have the money on paper. I just don't necessarily have access to that capital.
Yeah, no liquidity, no cash flow.
Yeah. Yeah. I mean, it's the same issue that I have in rental real estate, right? All the money's in the walls. To be quite honest, right? Like it's on paper, I look awesome. But if you wanted to look at my liquidity, until there's a refinance or an exit, it kind of ebbs and flows, to be quite honest.
I mean, you look awesome anyhow, brother. So just putting that out there. So, and then it's all, like you said, this all works until something happens and you actually need the money.
Hmm. Yeah,
And,
and
and,
that's
right.
Yeah, so that's like why a portion of my capital, I know yours and Connor's and Patty's and a lot of our members here, that liquidity buffer, that's where we start capitalizing our personal banking system. And yeah, you can be doing all the right things. I think to the point, right? I'm doing all the right things, but why do I feel stuck? Why do I feel tight? Why do I not feel as far ahead as I should? And it's because you haven't paid attention to your present self. You are preparing for your future self,
Mm.
for those of you who are capitalizing your retirement accounts, but you may not be taking care of your present.
I love how you're bringing the future self and your present self into the equation. I love that. So, if you're listening at home, here's a question for you. Have you ever had a month where nothing went wrong and everything felt fine?
Have you?
I I'm waiting for that month. Every month, right? I'm waiting. I'm like, yeah, this is the one where it all goes smooth. No, it's a
And I'm
stoic.
I'm thinking back to elementary school with nap time and playgrounds and
I still think there's something that made us cry or upset us. Somebody took our toy or our favorite blanket. Something had to happen, right?
yeah,
Like every day something happens. That's a great stoic philosophy. Like expect someone to be mad at you, someone to yell at you, something bad to happen, and then your day's gonna be perfect because you already expected it to happen that way. So
fair enough. So what's another financial joke? We have one written down here, just pay cash for everything. And it sounds smart up
cash,
until it
cash
doesn't.
money.
Yeah.
Yeah,
So
it
I
does
mean
sound
paying
smart.
Yeah, paying cash though is kind of similar. It goes off of like the first joke, right? You still leave yourself exposed, but now after the purchase. Hey, I paid all cash for this car. But then the moment that you paid all cash, you actually have the opportunity cost. And that's another rabbit hole we can go down. But the moment you pay all cash for something, you actually have to start saving for the next purchase all over again. But
Yeah,
there is
now
a
you're
way that
talking
you
about
can
our friend Sally Saver. Now you're literally right. You save and you make this big disciplined effort, and then the joke is when you need something and you've saved for it and you've done all the hard work and you take the money out, you go right back to where?
back to zero.
Back to zero.
But why do people do it? And they do it because they don't want to have payments at the end of the day. And again, it sounds smart. It sounds smart not to have payments. And then 2 weeks later, boom, life happens like an emergency. Your kid gets sick, air conditioning goes out, right? You're shifting money all back around, hoping that nothing else comes up. Life doesn't change anymore. But what if life does change? I mean, to that point, I paid all cash. I don't have the payments. But
Mhm.
what was the opportunity cost of doing that? Not just the financial opportunity cost, like the emotional, the preparedness costs.
It's huge over time. It's a huge amount of, it's in the millions. Like if we're talking about vehicles, you finance an average of about 11, or if you pay cash, right? You're doing the same thing. You're just paying cash, you're giving up the opportunity cost, but somewhere between 11 and 13 vehicles over a lifetime.
Hmm.
And that ends up being millions of dollars that you'll never have in your system again if you're paying cash over and
Yeah.
over again.
And if you don't believe Jason, book the call. Jason can walk you through that. It's pretty fascinating.
It is. It's pretty simple math, and again, it's a equation of long-term thinking.
Hmm.
It's you're not thinking about the next thing. You just want the car in the moment. You've done the disciplined thing, and it sounds smart. Like Jeremy keeps saying, it sounds smart. And then at the end of the day, you're 5 cars in, you're 25 years down the road, and you're like, why does it feel like I'm on Groundhog's Day? Maybe that's the joke. Maybe that's the April Fool's Day. Number three, we have just invest it.
Yeah, that kind of creates a different problem, though, right? And we already kind of alluded to it before when you start locking money up in places that you can't necessarily access. And that access may be because the IRS put restrictions, right? You can't touch these retirement accounts until you're 59 and a half. But to my point, one where I physically live is the money's tied up in the walls of
Mhm.
some investments, right? I did invest it, but I don't necessarily have access to that capital. So on paper, again, I'm doing all the right things, and then something comes up and I need cash. And we've gone through that in previous episodes on what happens when I need cash. Well, I go back to my personal banking system, which that ensures that I don't have to do what? I don't have to sell something at the wrong time, which will make me have taxes. I don't have to wait days for capital to settle when I'm trying to move it around between accounts. I don't have to pull from the wrong account or a retirement account. I actually know someone, Jason, believe it or not, during COVID, money got tight. What ended up happening? Had to go to his retirement account. The guy's in his 30s.
Mm.
He had to go to his retirement accounts and pull capital out. What did that just do? That interrupted the compounding and all the benefits that he was having in his qualified account. So it's not that you don't have the money, it's just, are you giving up the control to someone else?
Yeah, it always ends up being about control. And I actually know someone else that did exactly that during COVID, and you might know him too. He might be your co-host.
Mm.
And, we paid the taxes on that for the next 3 years. I made the decision when I was transitioning out of corporate America that I'd rather invest in myself and use that money. But like you said, I interrupted the compounding. I got out at not the most opportune time, lost a bunch of money there. The money that had built up was even less, and then I got taxed on it. So,
So, I mean, we're starting to create this cycle where I'm sure our listeners right now are thinking, well, damn, I'm damned if I do, I'm damned if I don't, right? I either save, I invest, but I can't do both. I can't do that at the same time. So, I mean, what are you guys talking about? Because you're talking in circles. You're going to make me feel stuck.
well, no, we're not keeping anybody stuck. I mean, if you're following this common path, I mean, this is a fun episode, right? It's 4-1. This is our 6-7 episode. I saw that you took that out of my original script because you know 6-7, right? 67. The next one we have is avoid all debt. Is
Hmm.
right? Isn't that always the win, right? If we do what Daddy Dave, as we call him, does or tells us to do, we avoid all debt, we pay in cash, we should be winning, right?
Yeah, but when you avoid debt, you also give up some flexibility. And again, not all debt's created equal. And you don't want to necessarily drain your cash in order to pay a loan. Here's an example of that, right? I have a mortgage, but I'm going to pay an additional payment every year. And I'm going to reduce that 30-year mortgage down to a 20-year mortgage by doing so. Or I'm going to just flat out refuse financing altogether. I'm going to pay all cash. What was the opportunity cost of that, right? So I knocked down one domino, but what happened to that tax bill? Or what happened to that payment? What happened to, hey, I got ahead on that payment, right? By doing that on the mortgage as an example.
Hmm.
But now, if an emergency happens, I got to put the money now towards the emergency. The mortgage company doesn't care that I did an extra payment a month, 2 months, or a year ago. They're going to say, what's that payment that you owe us now? So avoiding all debt or trying to accelerate debt pay down may not necessarily be the right answer. Again, not all
Unless,
debt's
wait,
created equal.
unless, sorry to interrupt you, but unless, like I was just thinking about this because I work with thousands of people. If the issue is debt, even if you're a super high earner, you're a builder, and you have some debt where you're paying, I don't know, 6, 7, 10, 15, 20, 25, 29% to someone else on a consistent, persistent basis, then yes, you got to stop the bleeding, right? We talked about this before. The issue could be how you're paying off the debt. Because again, we start off this episode just talking about we're changing one thing. That's it. If you change that one thing, your debt could actually work in your favor in the long run.
Yeah, because you want options with your money. So who controls the options? Is it you or is it someone else?
Exactly. Always back to control. And when we started this episode, I'm thinking we could pretty much sum it up with one thing, but we should go through all these things, right? Because it's fun. So, number 5, I'll deal with it later.
Yeah, that'll quickly backfire on you. Because, I mean, here's the thing, right? Waiting feels harmless until change occurs. And I think a lot of people, they wait, they put things off because life just happens, especially if you have a family, right? You got the kids, you got your 9 to 5, you got practice, you got shopping, you have groceries, like all of that.
I just got
And
tired listening to that.
yeah. So, I mean, you always put things off when it doesn't feel urgent. But then the moment that it feels urgent, it can feel life shattering as well.
And it's like anything, right? It's the pad principle. We've talked about this. It is the pick a date principle. Pick a date and start. A lot of people don't start because they don't understand certain parts of the process because it's an uncommon process. This is not something that you're hearing about in the common things we're talking about today. And when
Mhm.
you say, I'll do it later, what happens when it backfires, and I've had this happen to friends, to peers, to potential clients that wanted to help, and they have a health change or a price change or they no longer qualify the same way because something else changes. Like the window doesn't stay open forever. So when you understand that, hey, this is something I got to do, it makes sense. I understand that taking care of myself, building that foundation first would be the optimal move. Then just do one step at a time. Look, like in the Bible, Noah didn't build the ark when it started raining, right? Could you
No.
imagine when the financial floods came to wash everything away? Everything was already built for Noah. He already had two of everything. So why would we wait to set up our financial system, our financial arc, if you will, till it's raining, till it's pouring, till there's no hope and you're trying to rush and get everything done?
Yeah, I mean, I would ask our listeners, what are you waiting for? What are you putting off that could be harder later, right? And there's a saying that I like to live by: don't put off tomorrow what can be done today.
Yeah. And a lot of
Because
times the things that we put off are really simple, right? I've shared this a bunch of times where I had this list that was overwhelming me and I was working with a peak performance coach and I jumped on the call and I was like, his name was Jeremy too, by the way. Must be cool guys with the name Jeremy. But I was like, Jeremy, bro, I need help, man. I've got this, that. He's like, sip. What are you talking about? 3 minutes, 5 minutes, 10 minutes, 12 minutes. Get all that done in the next hour and call me back and tell me how you feel. So if you're holding off on something, it really is as simple as what I just said. You book the call, you have a strategy session, you're met where you're at today, and you make progress towards your goal.
I mean, so to just kind of recap these until we get into that solution, right? I'm doing everything right. So what's wrong? Let's just pay cash. Let's just invest it. Let's just avoid all the debt. Hey, you know what? I'll deal with that later when it's an actual problem.
Hmm.
So what actually changes? Like how do we get over these, I don't know, these financial jokes, so to speak?
Yeah, again, it's not a money problem, it's a money pattern. The difference isn't how much money you have, it's knowing exactly how to use it when something happens. And so the way that you start having control is you already know the answer. If something happens, you know where the money comes from. You know how fast you can get it. You know what affects it, right? You know you're not figuring out in the moment. You're being proactive. You're working like a builder because you've changed one thing and you're actually following the first law of wealth and you're paying yourself first. That's the
Mhm.
difference. It's where you're storing it. What would you like to add to that, Jeremy?
I mean, just doing that, just paying yourself first, like your present self. You can still prepare for your future self and your retirement by taking care of your present self as well. And when you do that, you start to feel a lot more calm and collected, right? You want to prepare before the emergency shows up. You want to prepare before you lose control. You want to prepare before the tax bill comes or before you get penalized. There's ways that you can do all this, and it starts with becoming your own banker, quite frankly.
Yeah. And if something in this episode felt familiar, don't sit on that. Go to wealthwisebanking.com and schedule a call. We'll walk through one thing with you. If something came up this month, what would you actually do? As always, we're going to meet you exactly where you're at, and we're going to help you plan for everything we talked about today.
All right. I think it's time to take advantage of the rest of this April Fools and go play some pranks, man.
I'm kind of afraid to play pranks with anybody in my family here, brother. So, but as always, you're already in banking.
You're just not the banker yet.
See you next week. Thanks for joining us on WealthWise Banking. If today's episode inspired you, please subscribe, leave a review, and give us a like. It's a simple way to help others discover these empowering strategies and join our community. Together, we're building a network of people who believe financial freedom is within everyone's reach. Remember, financial independence is about making every dollar work for you, one step at a time. Until next time, stay inspired, stay in control, and keep building your legacy the wise way.